Righty ho, everyone, and welcome aboard. Thanks for joining me for this version, the Thursday session of Trading Buddies. It's lovely to have you here, as always, and let's hope we can get some cash in the bank. But if that fails to transpire, then a little bit of education or some sharing of knowledge or ideas, that would be wonderful. All right, let's get stuck in, shall we? And first up, we'll have a look at gold. As is the case, just about every day we do this. Sharing the gold screen now. Okie dokie. I've got a couple of people waiting to be admitted. There we go. So with gold, we've got the current bar pushing us through that support level. Well, not necessarily support level, but the low of the day. And of course, that's going to change our ideas as far as entries and targets are concerned. So we'll just wait for that to occur before we look to place an order. The, pardon me, boundary at the moment are those two red lines that you can see, but of course it may well be changing given the current bar that we're watching. I'm wondering why I can't find us on YouTube at the moment. Just pardon me, guys. I've got to make sure that we are, in fact, streaming around the world rather than just in this room here. And it doesn't appear that that's the case at the moment, which is kind of weird. Maybe it just takes time to catch up. Give me 2 secs, guys, and I'll make sure it's happening. Otherwise, the world will fall down around my ear holes. It might anyway. This is a pain in the backside. Okay, just let me check my controls. Says we're live streaming. Okay, I'll have to trust that. Right, those of you just entered the room, thanks for joining me and us, which of course will be Ash in the not too distant future. He's just getting the late mail on the footsie and all other things. And of course, it is Thursday, and my good friend Phil will be in as well to talk his method of trading, which has got some of you stumped, I'm sure. But it is a very, very fascinating way that he trades, and I'm looking forward to exploring that a little bit further today. Hi, Catherine, or Kay, I assume Catherine's Kay, could be wrong. Kay anyway. Hi, how you doing? Paul P, happy Thursday to you too, mate. Hope it's a good one. All right, we're getting closer to looking to trade this. The low is now a little bit lower than it was. 1977 is the low. Which is pretty much the same as what we've got there. The high is 1986. 1986 and 1977. Okay, so we've got 9 pips or $9 rather to play with. And we've got 5 to there. I think we might add a little bit of spice to this today. We might take first profit here. Won't put anything in the bank. We'll just move our stops to entry and then use that as a target. And same to the downside. Although that's better than 1-to-1. Really? Can't be.
Jeff, you are live streaming.
Thank you, Phil. It's not telling me on where it needs to tell me, but if you're telling me that it's there, then it's there. Fantastic.
Yeah, I just had a look and it's actually there, yeah.
Beautiful, mate. Now it's here. Must have just need refreshing. Okay, what have we got? Less than a minute. And we've now broken through that level as well. Gotta hate that. All right, we can place the long anyway at 1980, what did I say? 1986. 1986, what happened in 1986? Something. It is Catherine. Hi, Catherine. K for Catherine. I worked that out all by myself. All right, so the low which was 1977, is still 1977, and it's triggered. So we're not in it. A bit too fast. What I will do is, if we get a retracement back to here, I will replace that order. I'll place the order. But I don't want it as a limit order. So when it goes through, which it has, I don't want to pick it up on the way back. Doesn't make any sense to me. So I'll reserve judgment on that. What we will do is have a look at the week thus far on the gold breakout. And if you've been trading it, you've probably done okay. By the look of this change away, that was Monday. Monday was SH1T. And as I said to you guys, I closed it was it in profit? Can't remember. I'd have to have a look. Or didn't take the trade. Didn't take the trade, one or the other. Anyway, it was a garbage. And had you taken that trade, there's 0900 there. So the high was there. You would have got taken in. You wouldn't have got taken out until you hit the weekly pivot again. But there's just no profit there. This is why I didn't take the order. So that was a nothing. Tuesday's a clear winner. Wednesday, clear winner. Thursday, at this point, we're not in, but let's see how it goes. All dependent, in my humble opinion, on what happens with the US dollar. And I've got no idea when they're making a decision. I think it's close, although I know Sleepy Joe's in the air at the moment en route to Japan. But the most important thing right now is whether they're going to, and I don't know why it's that important, because it's, to me, just going to happen anyway. They do it every couple of years, raise the debt ceiling. So I'm really keen to know what Ash thinks will happen when they do, in my opinion. I shouldn't say that. If they do, is the question. What happens to all the assets, including the US dollar, which I'm invested in at the moment because I want to see it continue to rally, which should drive the Aussie south. Now, I'm in the Aussie short, and here, just bang on entry. So we've had a day of it, given that we had, unemployment figures out in Australia, and they were poor. Yet the market drove down to yesterday's low and then came off it very, very swiftly, suggesting to me that the market is in stall mode, not willing to go through resistance or support because it doesn't know what's going to happen with the debt ceiling crisis. Crisis? Is it a crisis? They don't seem to think so anymore. It's just par for the course. Certainly Sleepy Joe doesn't care. US always pays its debts. Yeah, really? Then why are they in so much debt? Got me beat. Anyway, we are short, or I am short the Aussie, and it's just on entry at the moment. I would like to see in this session that break through the low of yesterday. If it doesn't, as I said to my crew this morning, I think there's the distinct possibility that there's a hedge on here on the Aussie with yesterday's candle. It being a reversal bar, of course, but more than that, it's also the potential to be a higher low on the back of this double bottom. And that is a concern. So I need to see price get down to take out these lows today would be, or certainly the low of yesterday would be good. Before I got any confidence behind this, should we get back to this area here, I think we're wrong, and I'll probably get out of the trade. The other one that's triggered is good old CAD Swiss. My goodness me. As you can clearly see, we broke out of this range, which this crucial level here at 66685, as I've got it, was broken yesterday, but came off its high as soon as it did. Now, the important part here for me, and keeps me interested, of course, is that it closed above the breakout area. Now, I would expect today that we're going to get a retest of that area, guess what's happening? That's exactly what's happening. And if we close below here, then again, I think the direction is wrong. That said, we could certainly see or foresee a retest of the broken trade line, which is more pertinent to the weekly chart really than it is to the daily. So yeah, a little bit on the edge here as far as what to do. Well, I know what I'm going to do, but I'm a little bit on edge here as to which way this is going to go. When I say on edge, I'm not concerned. We're only risking a small amount of our capital, but I wouldn't like to see it close below here. Let me put it that way. That's CAD Swissy. What else did I put you guys into, or my group into? Aussie dollar. Oil. So oil, we traded oil on Monday. I think we traded oil in this show, didn't we? Can't remember. I used to remind the elephants, as I told you before, but now age shall not weary them. Age wearies me, I can tell you. So we've got the breakout here on oil. Now, we were trading, of course, exactly what I just pointed out on the Aussie dollar. There's a double bottom sitting here, very, very clear. We got a rally, we got a pullback, and that looked very much like a higher low to me. And for that reason, I placed an order above that bar, stop loss below it. And we're in the money, but not by a whole bunch right now. I need to see some follow through on that today. And that said, I've also got a range here. I think it's just, I had to reset everything. What a bugger. Anyway, let me go a bit wider and I'll show you where that is. So the range that we had in place, take your pick really where you want to start it, but it's probably there in my book. These lows here, these highs here, you can come a little bit tighter on that, I suppose. No, I like these two highs. So that's the range. And if we get back into there, which is my want, of course, then I'll look to not chase it, but scale into this as we get up, come back, up, come back. I think there's a few trades to be had there on oil, and we are free trading that at the moment, having taken our first profit. So got a bit of work to do. It's got to get back above these or this support level, but once it does, then I think the trade is going to be good. But we'll see. As I say, free trading at the moment, which is good. So that's oil, CAD Swiss, Aussie dollar, and I think they're the only three that I'm currently in. We have expired euro versus the dollar. We also traded versus the Kiwi. We also traded that on the back of this bar here, stop loss underneath. Clearly that hasn't paid dividends at this point, hasn't even triggered. But I still think it's a distinct possibility, but it's got to get above that level. And that seems to be a problematic at this moment. It looks more like a break and retest of that area than it does a false break. So perhaps my directional bias is out of kilter, and that's fine because we're not in the trade. But if I get the hint that that can take place, then I'll probably look for a long still. This taken out, I think the direction is absolutely wrong. The only other thing I'm really keen on, although there are a couple, Aussie Swiss is one, but pound Kiwi is really interesting as well. We were talking about the Kiwi on Monday and three distinct possibilities to trade against the Kiwi, and they were the Aussie, the Euro, and this one, the pound. And I thought the pound had probably better prospects than the other, but it was in a terrible place to trade based on the candle. So the candle, big reversal bar, that speaks about 380 pips, and first profit levels about 155. So it's just there in terms of what I'd be willing to take as a first take profit. But I don't think it's a great reward to risk. And I said at the time, the best thing to do here would be to wait for a retracement on that bar and see if we can find an entry. Thus far, nothing to do, but I love the fact that we have had the retracement, and you can probably start this trade line from wherever you want. but it looks very much to me like a false break. It's an ugly false break, but this candle's interesting. Risk to reward, again, absolutely up to putty. That's an Australian term. Up to SH12 is probably more understandable. So what I'd like to see now on pound versus the Kiwi is a false break of support. So I want price to come back below here, maybe match that low, get back above the trade line, retest it, give us some room to take profit before the pivots and look to trade it long. But I don't think it's, well, I think actually the right place to be is on the miners at the moment, because it's very, very doubtful, or uncertain rather, as to what's going to happen with the US dollar. If the, well, depends what they do. Certainly if they say, no, we're not going to raise the debt level, that would be very, very interesting. Way beyond my pay grade, however, but it's not beyond ashes, so I'm going to put the pressure on it. G'day, mate.
Hi, mate. How you doing?
Yeah, I'm good. What's going to happen?
Well, it's. I mean,
if Sleepy
seems...
Joe's mob say we're going to go into more debt,
no, yes.
What do we
yeah,
do? And they will.
It sounds like they will. I mean, it's as you predicted, really, mate. I mean, it's I think there's more talks. I mean, this is the way it is the whole, every single time, isn't it? There's more talks, but they soften in the end, and they come to some sort of agreement and some sort of arrangement, and it appears that they're going to do the same thing again. So yeah,
because it's the same thing. Does that change anything? Are we going to see a reaction from the market?
Oh, for sure, mate. Yeah, I mean, we've already seen the Nasdaq do pretty well out of it.
Yeah, saw
actually.
that. You win. You said you were going to get in that.
I am in. I'm actually currently in the FTSE. And it probably won't be for very long. I did trade the FTSE, as you know, on Monday, and we made profit out of that one. It just managed to touch that monthly pivot, and then it collapsed. I'll show you the trade I'm in now. It's not been the easiest period since then, I've got to say. Let me just come in here. Here we go. So this is the trade currently. The other trade I quite like is the Euro Aussie, and I'll bring you that in a moment. Let me just show you the FTSE trade, and then we'll talk about the Euro Aussie. Here we go. So this is the FTSE trade. I wonder if I can bring this in with pivots. There we go. Managed to get a kind of a bounce off this area here. I was a little bit later than I would have liked to have been, but I just wanted to wait until the market actually opened up. The obvious target is this area. Now, I don't know whether we'll definitely kind of get right the way to that monthly pivot. We've had some bearish price action, but really, I'm just looking at these charts at the minute, and they look pretty good for you, mate. I mean, they're decent buy yesterday as well, so there's probably going to be some buying up here. I was
going to say on that previous chart there was a slingshot, nice little candle pattern that you could have taken.
Yeah, I think there's a few for you at the minute. It just seems like, I mean, I was looking at was it the euro dollar? Yeah, you look at this euro dollar on the daily. It's just kind of up and down and up and down and up and down. Sorry, Aussie dollar on the daily, up and down, up and down. The euro dollar. Now, I've been a bit frustrated with this one. I did get in on this area here, went really alongside here, but I was in on a 15-minute chart here, and as soon as I saw this bar here, and I thought, okay, that looks pretty good. So I entered there with the stops below. It's come and taken me out. But I like this one. I think this one does still have some upside to go. We've got Christine Lagarde out at 10 o'clock, but this is looking a lot healthier as a potential position to take. And I might even get into that on my other account. I probably won't trade it on the on this main account because the FTSE is yeah, I do quite like it. I don't know. The FTSE is a little bit more correlated, and I'll tell you why it's correlated, because of Christine Lagarde. If she comes out and says something relatively hawkish, then the euro is going to do very, very well out of this. I am going to get into a trade on my other one, but hold on, let me just do this 1 second.
So it sounds like euro was long for you.
Yes. Euro Aussie on the long side. Yeah, absolutely right.
Well,
With the stops at the lows here.
Yeah, need to kick the Aussie in the bum.
Yeah, I mean, to be honest, you know, one of the main reasons I like this is because of the seasonal bias that would suggest that we should be looking for long positions in the euro against the Aussie, and sorry, long positions in the euro and short positions in the Aussie. The euro dollar has not played ball at all. I mean, it's the same with this one. This one's meant to be looking for long this week, and actually, if you look at the weekly chart, the weekly bar, it's kind of hasn't really kind of established itself yet. So it's a little bit of a difficult call anyway to suggest that that's going to go down from here. So it might well stabilize. But the other thing that I did mention really in the Telegram group is that the dollar was due really to rally 2 weeks prior to this one. And it rallied last week, but not the previous week. So we might be might be a week out with this stuff. So we could still be looking at euro dollar long, but it might actually be next week rather than this week. And I don't know if you saw the CPI data yesterday, but the CPI data came in from Europe yesterday, and it was a bit tepid actually. It was a little bit, you know, there does seem to be some easing in inflation. It's still high, but it does seem to be some easing in inflation. So of course that has helped the base case for the euro. That's helped the base case for the dollar and has weakened that euro. We had some unemployment data from Australia overnight, and that was weak. So if you go back to the euro Aussie, and I can show you it on this one, maybe it's better to show you it here just so you can see what I'm doing. And there's a couple of reasons. Here we go. Let's go over here. So I've taken it on this account, this one here. So I've taken a euro Aussie long with stops at the lows here now. So if I look at this on the hourly, this is a very, very solid bar. You know, it did come down and it tested those lows and it's dived to the upside. It didn't close on its highs, but that's not a major problem. So really, all I've done is looked at that bar and then attempted to trade back to the breakout area on the 15, and it could be a little bit lower, but it might be this horizontal level here.
Indeed, where you are right now. Yep.
Yeah, exactly. So that's why the trade is there. Now, for us to kind of get any even money, it's gonna need to get near the highs, somewhere in this zone. It's gonna be an even money break. But if I look at this on the daily, this head and shoulders pattern is a problem. You know, it is an issue. But if you look at it on actually, let me just bring it back here, mate, because I don't particularly like looking at this. I don't like looking at this this chart very much. Those colors, I much prefer these colors. I haven't changed the other one. I should have done really, but I just triggered. I tend to trigger stuff on that one. Now, if you look at the euro Aussie in you know, some of the sort of like broader picture detail, decent weekly bar last week. So if it can break the highs, it does suggest that maybe we get back to the monthly pivot. So it actually could be a pretty decent trade. And then when you look at the dailies do suggest that we do have this potential for a head and shoulders, but it also suggests that we haven't tested this breakout point sufficiently. So we might even come back into this point and still create the head and shoulders. Now this one looks like about 10. And this one's got a day or so to go. So a couple of days of upside would still qualify this as a head and shoulders, you know, that the pattern wouldn't have been broken. Even into next week, it could still qualify it, and we could still then collapse. Now, this is probably dependent on what Christine Lagarde says. She could do with saying something hawkish for me. And if she does, then this is probably going to pop to the upside. And then we're in this zone. So really, targets on this one. Now, if we go back to entry and stop loss where we are currently, the entry is pretty much where we are. And the stop loss is down here. So we're looking at around about 37 pips there. Now, if we go back to the daily, to get to this high here. It's about a 3-to-1. We're looking at a 3-to-1 to that point. Now, if it gets back to that area there, we're looking at a 4.5-to-1. So I think that there's some validity in attempting to take this one on, even before the Christine Lagarde speech, because the charts suggest that there's a setup. So the setup is should be from my perspective, I need to take these setups and ignore really what happened last time. So yeah, in the Euro Aussie long, and of course the FTSE as well, mate.
Now talk to me about the dollar. What's going to and everything else, all other asset classes. What's going to happen when they raise the dollar, or when they raise the ceiling?
If they raise the ceiling now, this is really being manifest in the Nasdaq. The way we're sort of like seeing that Nasdaq push. This is much of this is because of the conversation about the debt ceiling and the fact they're getting pretty close to it. So the Nasdaq, will probably tell you what you need to know. We are at this level here of resistance, so it'll be interesting to see whether it gets through there before they've actually done a deal, or whether we just kind of pump up to the top end of the level and then stop until they do, actually announce that there is an absolute resolution to the issue over in the United States. So difficult, mate. Really,
is that programmed? I mean, is it scheduled? Or is it just going to happen out of the blue?
No, it is scheduled. It is scheduled. I can't remember when it is. Biden is currently traveling, and I can't remember where he's gone now. But he's got,
Japan.
he's got his officials kind of. He's gone to Japan. Okay, so he's got his officials kind of on hand and dealing with the situation. So yeah, I mean, it will get sorted. Or there'll be enough. There's enough kind of top end officials kind of dealing and taking care of it to suggest that it can happen without him being there. But the Nasdaq is really telling you.
Yeah, he sacked Australia. He's supposed to be in Australia today, I think it was.
Okay.
Or maybe even yesterday. And his reason for not coming was the turmoil in the economy in the US.
Okay.
So that says a bit, doesn't it? So he's okay to go to Japan, but not okay to come to Australia.
Well, I don't know what that's about, mate. I mean,
Sleepy Joe up your thing,
And obviously, we can't really talk about the dollar unless we talk about gold. And now, I don't know whether I'm right on this, mate, but what I find quite interesting about gold is that with inflation kind of starting to ease back a little bit, and the possibility that we still see sort of a higher interest rates, as they still wrestle with things. Is it possible that we see we still see gold kind of easing to the downside, or will it remain elevated? I wonder whether in the end gold is probably going to come back down to an area. I'm not sure exactly where. Come back down to an area and then still pump. Because there's still a lot of uncertainty and a lot of issues out there. But I wonder whether this particular period, we do still see gold just easing back as the inflation battle appears to being, contained at the minute.
Remember, must have been a month or more ago, I shared with you a guy, I can't remember his name, but one of the gold, inverted commas, gurus, who has a vested interest, right? And most of them do, these spruikers. But he pointed out very clearly, and I'm sure you will remember me saying, that generally speaking, or anecdotally speaking, or even historically speaking, every time that gold pushes through, it's generally the fourth attempt.
Yes.
1, 2, 3, 4. I don't know. 1, 2, 3, 4. If you like, but I suppose 1, 2, 3, 4. Right.
We're on my chart still. I don't know if you want to take it.
Okay. Well, then everyone should have a good imagination, if that were the case. But if you go back to where did I put? Where did I feel the first one?
We're on the daily.
That I looked at. Yes, on the daily.
Yeah.
So go back to where 2020, about April 2020 through to June 2020.
Yeah.
There's 3 shots at the top of that range
Yeah.
Wow. Are you on the daily chart?
Yes.
Okay. Really? Go
Yeah.
tighter. Much tighter.
These are gold futures. I don't know whether that might make a difference.
Zoom in a bit, mate. And now go to
2020.
April 2020.
That's June.
There you go. There you go. There you
There's
go.
April.
1, 2, 3 cracks. It's probably
Yeah.
actually 5. And then it pushed through, right?
Yeah.
If you go back a bit, you'll see that that's a common thing.
Yes.
And what have we had? We're now faced on the weekly chart with a massive triple top.
Yeah. 1, 2, 3 cracks. Yeah. I see it, mate. I see it.
So,
I mean, if this plays out as a kind of W topping, or an M topping pattern, then it would suggest
that's actually not what I was talking about, but you go and I'll tell you.
Well, just something in the region of a retracement down to about 1925 on the futures. Somewhere around here now. If we look at this on a weekly, yeah, not too well. Actually,
that's the chart I was talking about.
Yeah,
that's the triple top, right?
Yeah.
1 fail, 2 fails, 3 fails. Now that's not 3 amigos because they're all equal, almost to the dollar, and they're not rising, right? So that's a triple top. We've had a double top. And we said every time you see a seller bar on the weekly chart from now, you should be selling it. And I'm now of exactly the same opinion. If you get a game changer on the weekly bar, you should be selling it. Then if you go to the daily, you do have 3 amigos. In fact, you've got 4 amigos. And exactly where you're suggesting is probably the area that I would be looking minimum as a get out place. So yes, I'm extremely bearish at the moment.
Yeah, I get it, mate. I mean, if I was just going to bring in this trend line as well, actually, just to see sort of like where that leads us.
See the 3 amigos now. False break high, false break higher, false break higher.
Well, look at that.
So
I mean, look at that confluence area.
Yeah, you're now at the breakdown point.
Yeah.
And you're through it.
I mean, that would look good at 1925. Gold is going to start looking quite attractive. Until then, I don't think I'd be, that interested. But I really like the trend line and the horizontal level that we can see here on the weekly. That looks really positive. It's somewhere, isn't it? Somewhere in this area. Might be there.
Yeah, minimum.
Yeah, I'd go with you. And it's also the measured move. From the M shopping pack. So there's a lot to like there.
Cool. But as you say, and I think the next time it gets up there, it will break through there because it's had a couple of cracks at 2000 now. So I think the next time it goes, whatever drives it there is in the future, of course. And who knows what it could be. But at the end of the day, precious metals are going to win out, I think, over anything else. So just a matter of timing. Yeah. When that is anybody's guess.
Yeah, agreed. There's not really anything else. I haven't been looking at oil, and I saw that you were looking at the oil market, which I think is really interesting. And we are starting to see just a bit more of a shift of positivity, it seems, in the market. So I think the fact that you're looking at oil is, as I say, quite an interesting one. I didn't see the. I think there were some numbers. Was it yesterday?
Yeah, we were talking about that on Monday, I think. Well, yeah, we were.
Yeah, we were.
And I said I was looking for a higher low, and it looks like it's there. So we're in the trade, and we're free trading it. But we've got a bit of work to do because we're now at the resistance level, former support level.
Yeah, so we got. I think tomorrow, is it tomorrow? Yeah, it looks like tomorrow It's on the Friday, isn't it? So we'll see. We'll see what the United States crude numbers are tomorrow, and see if you get a bit of a boost from some of that stuff as well.
That'd be good.
Yeah.
Boost.
Yeah, but anyway, mate, generally speaking, it appears right now that the sentiment is relatively positive as we kind of speak at this stage.
Yeah, look, I find that a difficult one because it's day in, day out. It's the Miyagi market, risk on, risk off. And I think, again, that's probably got a lot to do with what's happening in the US. And once that resolves itself, we may get some sort of uniformity or direction, if you like. I think for that reason, it's been pretty difficult to trade end of day stuff, but intraday, I think, as you pointed out before on the euro, there's a lot to like about those ranges. I think you can successfully trade them.
It feels like we're in that sort of that particular time of year where trend is going to be a little bit harder to find, and some of those range trading strategies are going to kind of win out, which is really where you step up and step forward, because it just the market has calmed down, of course, as it would do after we kind of had the inflation kind of surprise, and then the interest rate surprise, who was going to go, who wasn't going to go. We are now starting to kind of get to what is perceived, at least, as the end of this particular kind of cycle. Now, whether it holds or not is a question. Does inflation again spike? And you've got to wonder what's going to happen at the end of the year. These next few months, while we're in summer, Putin doesn't hold the card, so that aspect of the inflation issue has kind of just thinned out a little bit. The supply chain concerns that we did have, they've also kind of thinned out quite a lot as well. As people have kind of countries and businesses have caught up with what they need to do to get the right level of employment. So that's eased up a little bit. So it does seem like some of the inflation narrative can start focusing on probably pausing on interest rates. But as I say, the Putin aspect I don't think is being taken into account, which it can't be really. When central banks kind of like come up with their models, it's probably very, very difficult for them to put in an aggressor of a nation is going to do, and how they're going to react, and what tools they're going to use to try and really force their argument through. So they haven't probably modeled that in. So winter's going to be another interesting period, but I do think for now, probably right through to September, we probably do just calm down a little bit. And as I say, possibly see some of these central banks pausing. Australia has already kind of suggested that they will do that. Last time out, they did raise interest rates, which was a surprise, but unemployment was weak today. And there are other metrics that suggest that things are cooling in the inflation narrative. Not in the United Kingdom, of course. But again, Europe found some relief yesterday. So I think we might go into that kind of range bound aspect in the market for a few months. And really, this is where you step up, mate.
Wonderful news.
Yeah.
Hope you're right.
Yeah.
And of course, it does mean I have to go onto smaller time frames, which means I have to dedicate more time to the markets. I've probably got that now. We're in winter here. It's a lot quieter as far as the business is concerned. So people are not wanting so many plants. So that's fantastic. I will be doing that Tuesdays, Wednesdays. I said I'm coming back to the smaller time frames on Tuesdays, Wednesdays. So I'm getting that in place at the moment. I want to share with you before we go to Phil. Now that you are done, mate.
Yep.
Cool. Just a couple of things. And I think the crucial point, and I spoke about this weeks ago, for the dollar index is now starting to look like we may have progress. And that level was here. I'll change my charts for some reason. But that's a very strong level, that support level there. Let me drag that down. And of course, we spent a lot of time there wondering what the next move was going to be. And maybe we found that. And you'll recall at the time I said, I think from my perspective, from a chart point of view, that we're probably headed here and we're going to spend a lot of time here, which goes to your point, right? Of course, this is the weekly chart, so it's going to have to happen far quicker than that. Or maybe not. Maybe we do spend that amount of time in here through the summer, and that wouldn't surprise me at all. But a lot will depend on the debt ceiling decision, blah, 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 blah. We've spoken ad nauseum about that. So I think at the moment we're getting a positive sign from the market on the dollar, whether that's related to the decision or what they think the decision is going to be is, like I said, way above my pay grade. But from a technical aspect, we're now at that crucial point. So we've broken out. We've retested it on a daily chart, that level, at a pivot. So I'm pretty confident that what I'm seeing is probably going to transpire. So at least up to that trade line, of course, that's why I'm short the Aussie at the moment and why I'm thinking that that's probably a good idea as well. The only other thing, as I said on Monday, this is probably a bit of a hedge rather than anything else, but the chart pattern's there, and oil won't necessarily do exactly the same as the Aussie dollar, but against the US dollar, you would expect that one will do the opposite of the other. So I'm probably not going to make too much ground here, no matter what happens. But that's not a bad situation to be in this uncertain market, if I'm perfectly honest with myself. The only other one I didn't show you earlier was Aussie Swissy. And I'll just bring up a chart of Aussie Swissy, which should be that one. And the reason I like Aussie Swissy is probably pretty much the same reason I liked Aussie dollar. Trend is clearly short. Then we got false break of, and this is why I like it, not only the trade line, but you've got the monthly pivot there, you've got the daily pivot there, you've got the weekly pivot there, and it's broken through all four of those: trade line, monthly pivot, weekly pivot, daily pivot, and retested the whole four. Everything's been inside that since that occurred. So this is going to burst out of here at some stage. What I'm anticipating is that it will come back to trend and test these lows. Now, the reason I'm not in that at the moment is because I'm exposed to the Aussie versus the dollar. But if you're not, I think there's far worse positions to take than trading that bar there, either putting your stops up here or above that swing. I wish I weren't exposed to the Aussie versus the dollar at the moment, because I think that's a reasonable position to take. If it breaks to the high side, who cares? So you want to get your entry probably a little bit lower than the lows here, 5 or 10 pips below the lows. But if this goes back to trend, then there's not a whole lot underneath this until we get to here, which is a long way away. Will it? Who knows? But at this point in time, all I can see is that space underneath us, which is pretty cool. So Aussie Swissy, I think, is a reasonable position to take. The only thing that I suppose is really against it in my book is you've had 1 phase, 2 phases, 3 phases, maybe even 4 phases, which makes it difficult without a decent retracement. Is that it? Pretty quick, which generally says to me that it's, pardon me, it's not sustainable. I'd much rather see a slower pace. It's like a short cover, if you like. And for me, that false break is singing out, we're going to test these lows again. We'll see.
Yeah, interesting pattern that, isn't it? Inverted head and shoulders, and there'll be a lot of people trying to pick that up there.
Mm-hmm.
around that.
They will, as I said, if they do, I don't really care, as long
Yeah.
as they don't take me in first.
Yeah.
Which, of course, is the challenge that we have all the time. Where do you put your entry? And like I said, you want to get a fair bit underneath those lows because that's where the liquidity is for the longs.
Yeah, the
Righto.
Swissie's been just a little bit tepid actually recently as well. It's same. It's a strange period right now. Just not quite as straightforward as we've had it. I don't think.
Well, I guess a good illustration of that is exactly what I've just pointed out. If these play out, they normally play out fairly quickly.
Yeah.
So up, consolidate, back under, retest, then go. That hasn't been the case. We've gone into range. So that's a concern, definitely. But everything's inside that bar, as I said. And they've tried twice to go to the high side and failed. Interesting.
Yeah. Yeah.
Very interesting. It's that time of the week where we need Snaggy to Phil. Hello, buddy. Put him napping.
See if Phil can shed some light on for us.
There he is.
Once again, Zoom's different to last week.
It's a challenge, isn't it?
It sure is. Yeah, some of the things you were looking at there, Ash, you were waiting a bit of time. The 22nd is time by degrees again.
Yes. Yes, interesting. Really, I was looking at that, and I was looking at that particular date on the FTSE, and just trying to sort of like get a feel of which way it may go, because that's the thing about time by degrees, isn't it? It doesn't give you directional bias; it just tells you that there will be a high or a low, or there's likely to be a high or a low, I should say. And two things kind of come to mind. It suggests, we talked last week, and it would suggest that as we thought that it might be a low because of coming down. But actually, we are in a seasonal short, so yeah, I wonder whether we might actually sort of like get stuck here and actually sort of like find that we've reached a bit of a level that we're actually going to push down from. Next, is it Tuesday? No, it'll be Monday, won't it?
Monday, yeah, that's correct.
Actually, I don't know if it's coincidental, but a lot of these seem to happen on Mondays.
Could be. Well, I guess, Friday and Monday. Kay's just saying that things are hard to read, and she agrees. And it's. I mean, it's that's the way things have been for me really recently, and it's quite important because it's only just happened, and it's quite important to kind of recognise that, because it might be sort of like that time of year that you say, you know what, maybe we should just lighten up a little bit. We can make some decent money when things kind of start to calm down again. So maybe we should just lighten up a little bit. It's not a good idea, I don't think, to stop trading. It's never a good idea to stop trading because you can really lose your rhythm. But maybe doing some other things within trading. Maybe taking smaller positions, possibly even trying a strategy on a demo account's okay too. But I wouldn't just walk away. We
could take profits, different stop losses. Yes, all of those things.
Yeah, just experiment with some other stuff. Sorry, Phil, didn't mean to cut in.
No, you're right, mate. Yeah, I agree. It's just a dead loss. I was in the Aussie 200 short, and it was mucking around. And one stage it looked like it was only going one way to me, and that was fine.
Yeah.
I came out on the right end of it, but it just got to the stage where it didn't know where it was going to go, so I just got out of it. There's no point mucking around with it.
Yeah.
Yeah. And if the FTSE, if I can get the screen off you.
That's off, Jeff.
You can. You have the power.
Which is where we ended up last time. And that's just exactly what I was talking about. My screen's finally gone back to normal, I think, now. So we hadn't got down to doing 15-degree cycles, but if you have a look here, obviously that's where we are at the moment. Is that current data there, Jeff? Actually, no, it's not. That's yesterday's, so I haven't got today's data yet. Not sure why that is, actually. When do you guys
No.
open? Oh, no, because it hasn't happened yet, has it? It's just happening now, I suppose.
It's opening now, yes.
Yeah.
Well, it's been open for 45 minutes.
Yeah, so I won't get data for a little while. But anyway, the point is just to work out, we didn't really know where it was going to go the last time we spoke. But I put a 16-degree or 15-degree cycle on here, and the last 30 happens to line up on we must have known this last time. So the full cycle comes out on the 22nd as well. Everything I've looked at, everything I'm looking at is all doing the same thing. And what I think I might come across as I learn a bit more with this MRI thing is you can actually, I believe you can pick when it changes cycle. So it might have been doing, 60s and 60s and 60s, and all of a sudden you have a sort of the whole market gets out of whack, which might be now. This is typically of what might happen, and then it'll just start again, but half a phase out of whack from where it was for some reason, and it does, and the charts to do that occasionally, but I'm not smart enough to recognise it exactly yet. But I know it's there. I've seen it before, but I haven't worked out exactly what causes it, so I can't really pass an opinion on that.
Well, I'm just going to stop you there for 2 seconds. There may be people in the room who are looking at your chart going, WTF, what are all these dates and times and things? I'll just briefly explain that they are points on the chart where Phil has determined through his time by degrees methodology that something will happen. So he's annotated them as a date in relation to what he calls time by degrees, which is worked out on the sun, pretty much. So that's where we are with Phil. And he's telling you now that on the 22nd, which is Monday, something's going to happen.
We'll be close to it, that's right. Wouldn't have thought it'll be a little bit...
Thereabouts, yeah.
Possibly a day out, that's correct. The vertical lines are degrees of the sun, where the sun was, an important dates in our market, and turns out most markets. And there's something that you don't get on a normal chart, and I found that the targets are always moving. So by putting the sun time on there, that never changes. The chart itself can do what it likes. It's all variable, as we know, but now we've got something to reference it off, and it just makes my life so much easier, in my mind anyway. So I just work by those degrees. That's correct. And the 30
it says something about your mind, Phil, doesn't it?
Yeah, it's a bit sad, really, isn't it?
What's going on in there, man?
But I've learned to cope with it, and I can make money out of it, so I'm not arguing with it.
That's all that counts, yeah.
Yeah, so that's where we're at, and I don't know whether anyone's got any questions or not. But I sort of had something a little bit different again tonight, which where we've been zooming in on the micros here because it's been interesting for Ash, obviously, because this is the one we haven't been looking at. But to me, like I said, I got out of the Aussie because it's just everything is just in general, everything's going nowhere. So this leads me into another topic which got me started on what we're actually looking at on the screen, is that what do I do to trade things that aren't affected by all the dramas we have? So when the market's doing nothing, or whether there's a black swan event, or all those sorts of things. So if you like, if you're happy with that, I could just skip over to that, and we'll have a bit of a bigger picture look. Now it's on shares because it's something that I know. It's not the FTSE, but obviously, like most things I'm talking about on here, it's the principles I'm trying to illustrate, not the actual specifics.
Yeah, that's fair enough, mate.
Okay, you happy with that?
Yeah, I think you want to just use the use case that's or the case that makes the most sense and is easier for you to explain.
Yeah, that's right. So we'll go to here to start with. So this is this is really big picture stuff, and I always say don't sweat the small stuff, and this is why that's in my mind. It might mean too much on the other chart at times because I know you guys want to know the small stuff, but this is why it doesn't mean much to me. So this company is Boss Energy, and the topic in my mind for the last 18 months or so has been 2 years, has been uranium, because Jeff keeps saying about the gold go in one direction and the dollar go in one direction. And to me, uranium, it fits that basket. The good thing about uranium is that, as I will illustrate as we get further into this, I'll keep it fairly brief. Generally, when the market's going down, this is going up. So that suits me as well, because I've got something to trade instead of waiting on shares going up and down into the cycles. Generally, uranium is a bit of a contrarian play from what I've worked out. So this is just a big picture. And
Phil, sorry, again, I'll interrupt you. The reason that you're interested so much in uranium is that there's so little of it in the world to satisfy what potentially is a no-brainer next move in energy, right?
that's correct. So with the amount of we'll come back to street level if you like. But with the amount of new reactors that are planned for the next few years, there's not enough uranium. There's plenty of uranium on the planet, but there's not enough uranium processed to run them all. So the pressure's got to come on. And
yet they're building them left, right, and centre, right?
Correct. Absolutely. Yep. So that's what got. So I watch these big cycles all the time. I have done for years and years and years. And I watched this one. Fukushima was when the uranium all died because they closed down a lot of reactors because the greenies jumped up and down. Because it was such a disaster. Of course, nobody died in Fukushima, and even 3 Mile Island, I think one person did. It's rubbish. There's more people get killed fitting solar panels than die in nuclear disasters. So it's just absolute rubbish. But anyway, so it's just a matter of inevitability, in my opinion. And what happened was, I watched it all through these doldrums here, and whether you can see, I can't see my own data here now. Oh, yes, I can. So back through 2013, 14, 15, 16, 17, 18, and in fact, about here somewhere, I'll see another chart in a minute, but about here somewhere is where I got back into it. But this is the big picture of this company called Boss Energy. It's a new company in Australia. They bought a mine. Actually, I think they bought it about here from the Russians. Actually owned it in South Australia. The guy that runs it is he lived through the last uranium boom, that was the peak of it there actually. And we'll look at that in a minute on the other chart. The bottom line is that he's timed it perfectly. He's a perfect salesman. He's a perfect manager. He's a great salesman. And this is the pattern of BOE. It's just a big picture that I want to show you. And as you know, as we all know, when it goes sideways long enough, eventually, providing the kids, everything's legitimate. Eventually, it breaks one way or the other. So that's Boss Energy. Now, if you trade Boss Energy on its own, it goes through its own cycles, all in relation to the price of the uranium and the stage of its development, the upgrading of the old mine setup, all that sort of stuff. So that's BOE. The second one I look at with exactly the same thoughts in mind is one called LOT, which is Lotus Resources, and that's based in South Africa and Malawi. It's partially backed by the government, and so on the LOT chart, you can also see, same big picture, you can also see where this spike here is, and this spike here, and the current time here and here. Okay, that's your big picture weekly, and bumped along the bottom. Oh, it's going to vary because of, it's not the same company, but the point is with this one, it's slightly behind, so they've got a mine, they got all the proven, the minerals are in the ground, and they're upgrading the mine, improving their systems, improving their power supply. The Malawi government's got a 15% stake in it, which they do to give confidence to the miners and that over there. Apparently, and interestingly enough, I'll say recently, I can't give you the exact date, I can't remember. The guy who is now the managing director in this company was the project development manager for BOE. So Duncan Craib's got all the contacts. You just can't imagine these contacts around the world from being mixed up in the uranium space. And now he's got his ex-project development manager has moved on to LOT. So that's a bit of a tie in there. Now, because LOT is not as developed yet, it's about, BOE is supposed to come online the end of this year, and this probably won't be till 12 months later. So we'll see the relevance of that in the next slide, if I may. Right, so here we go. This is, I'm going to simplify this even more because I don't need the small stuff. I've just done these two simple line charts. One says daily and one says weekly, but they're both weekly. When I put the second one on, it always says daily, but it gives it the weekly data. So I've just put a bit of explanation on here. Obviously, that the red stuff is Boss Energy stuff, and the Lotus stuff is obviously green. And what I want to do, or what I've been doing for the last 18 months is trading BOE, and that's where I came up with most of this time by degree stuff to fine tune it and make it really start to work. So by putting these charts on top of one another, we can illustrate how the BOE is going to be first to market, so it's first to jump, and the second time span down the track will be LOT's time, because they will become into production at a later time. Now, at the end of the day, it won't make any difference, but the critical thing is to me that at the moment, LOT, now there's an illustration here, LOT, their shares on issue this is millions, 1,207 million, so 1.207 billion shares, and BOE is 355 million. Now, at the moment, BOE's market cap's about 853 million, and LOT's is about 268 million. So it's about 3.4 to 1. But the share price, look, is about 20 cents, roughly 19 cents, 20 cents for LOT and $2.70 for BOE. So if you divide the 1,207 by 355, you get a ratio of 3.4 to 1. So if you then multiply the 19.2 by 3.4, it's 65 cents. So if we had the equivalent number of shares on issue, then LOT, nothing else considered, would be 65 cents. And at the moment, BOE,
you can buy it for 20.
Yeah, and exactly, and BOE is $2.70. Because we've traded BOE for the last 18 months, and it's now been, what's the word, priced accordingly, because of Duncan's marketing and the situation with the mine and the way it's all going, they're going to go sideways for a while, and the chart proves that. In fact, Jeff can testify that on the 27th of April, on that top there, was it Jeff? I forget now. Was that 2022? Might even this one. I sold everything I had in BOE, and we waited for this point here before I started trading again. So because it was well and truly valued, as opposed to so what happens is, with those things in mind, because LOT is so undervalued purely because of the time factor, then when it does go, because the tide floats all boats, and look at the percentage that LOT went up in relation to at BOE. So on this side, we've got this, the price down the left-hand column is the LOT. Hang on, 50 cents, where are we? Yeah, that's right. That's LOT's price. On the right-hand side is the BOE price. So when you look at the percentage, LOT is a far better investment. So what you do with, when the uranium cycle is coming, they're both affected by that, and the chart shows you that. They both vary as the uranium cycle varies, and that's mostly founded on, well, the overriding factor is the uranium price. So, and that's just what I've got here. That's where the vertical lines are the price of the uranium at the time. Now, that's price per pound. So at the moment, that's about, I think it's $300 a pound. a kilo. It's just $53 a pound today or whatever about then. So all these prices, but the percentages, once again, if when all things turn to SH1T, as Jeff says, it's always going to come back to 20 cents because that's about what it's worth. But BOE will come back more than that because it's probably worth more like $2 rather than $2.70. So you understand what I'm saying? Like it's because it's more an inflated or an emotional price up here because it's all ready to go and Duncan's a good salesman and they've got a fantastic some new gear there and everything. It gets a premium, but when everything when the brown smelly stuff hits the air mixing device, as they say, is another way of putting it, I suppose, then it'll come back to a lower base price. Whereas LOT doesn't have as far to fall. So what I'm doing now is trading, getting a better. I did a lot of trading through here. In fact, I did about, I don't know, 30 trades in and out. And for that whole period, so you make, quite a good sum on some of the trades, but over the whole period of time, I made about 5 to 7% for that 18-month or 2-year period. So that's how reliable it can be. And that was when my knowledge base was far less. The MRI stuff is really only come into play, as I said originally.
You're not saying 5 to 7% overall, you're saying 5 to 7% per trade, is that right?
No, 5 to 7% overall. So you might have made 10 or 20% on certain trades and you don't make as much on others, or you're not trading some of the time, obviously. So to average that out over all that time, to me, that's a useful sum. Let's put it that way. That made me good wages for the last 2 years or so. So,
yep.
But now, of course, and I think I mentioned this before, I could make 200 or 300% on what I made by learning the MRI stuff, the time by degree stuff, and fine tuning that and making it work. But what that made me look at was the bigger cycles. So here is what we are looking at, the bigger cycles. I'm just explaining a lot of this stuff so you know roughly where the background comes from, so it's not just pie in the sky stuff. And in the background, we've got this high point here, which is LOT. And interestingly enough, LOT was producing in those days. That's why it's going to go now, because its mine's already there, they're just upgrading it. And what happened at that time, as you can see, I've labelled here, there's a company called Cameco, and they've got a mine in America, in Canada, I think it is. The Cigar Lake flooded. It's very, very rich, but it's expensive to keep water. And they were doing about 15%, I think, of all the uranium on the planet out of that one mine. And this is what happened to the price, you see. So that was $135. Now that was their Black Swan event. But the point is, now this is where it gets really important. At that stage, this was being operated or not being operated very well by the Russians. I don't know much about that side of it. Probably don't really need to. But the point is, it wasn't influenced much by a potential drama. Like the highs and the lows, you'll see where uranium tends to insulate you from the, where else have I got here? I had a marker here somewhere. Oh, there we go, look. A better illustration, actually. Trying to see, there's one of them, though. There's the scamdemic, as I call it. So if you look on the chart, any normal chart, there's a great big dive. And that was 2020, wasn't it? Yeah. All the charts got a big dive on them, a hell of a dive. Well, look what happened to uranium. You wouldn't even know it was there, would you? And there's another, and I'm trying to think what that one there was. Oh, that's the global. Is that global financial crisis?
No.
So that was the GFC over here. So here's the GFC, and look at the uranium price. That's all I got to go by for BOE at the time. The Russians operated then. Well, for something that was such a drama and everyone talked about it non-stop for how long, and the uranium price barely even changed. Eventually it did, it settled down. That's all to do with the uranium cycle as well. But the point is, it's a counter for what's going on in the world in the cycle situation. And even recently, in bits and pieces, it is influenced by it, but you'll just see the percentages are just fantastic. So at the moment, I use this, when the economy turns to rubbish and it's going down, the uranium tends to go up because the more dramas they got, the more power they need, the more uranium they need. So it goes up, not down. So it's really good for insulating you against those bigger cycles. So then BOE has given us a nice trade to make some money in that part of the cycle. And now the next move we're getting close to now, I believe, is that it will, and I've sort of falsely traded this a couple of times lately because I'm expecting the breakout soon. LO2 will start running with this, you see, and it'll go up a huge percentage to start with, but then it'll catch up in relative terms and the percentage will stay the same. So it'll run up, it'll be up a lot higher. It'll get the emotion baked in and it will travel with the rest of them. But between now and then, when that happens, that's when you make the good dollars, you see. And it's already started to move. So I started trading BOE roughly in, where'd that go? It was September 2021. About here somewhere. I've got that on another chart actually. Doesn't matter much. I'll just put it in there now for just for reference. Oh yeah, that's the first time I started going. We started about here somewhere. So that's where we started trading it. And you can see the type of pattern those two companies have had since then, obviously BOE and LO2. So that's the difference now. You can make for this, when this catches up, you'll pick up all that extra percentage and it might not seem like much, but if you look on the other column there, and of course that is without going through what we spoke about a while ago with potentially, because there's a lot of shares on issue and LOT is listed on the American Stock Exchange, they will want to probably have a consolidation. So they'll take 3 or 4 shares and give us one back. The price will automatically go to say 60 cents because we agree that that's roughly what it's worth at the moment. So it'll go from 60 and then up. So that'll happen as well. That won't be a price increase, but it'll make the chart look more even and then it'll run up with the others. But in the meantime, it's still going to catch up that percentage because they don't normally do the consolidations until they really need to when it's to do with the Americans don't like shares that are 20 cents, you see, obviously. So that's why Duncan Trade got BOE up around $2 to $3 because the Americans will trade it there because that's listed on the TSX, I think.
But at the moment, you've got a 65% discount on that stock, according to your figures. So 65 cents versus 20 cents.
Well, yeah, but at that stage though, then you're you should have less shares. So it wouldn't be any off.
Yeah, no, before that happened. Sorry.
Yes, I reckon so. That's correct. Yes, if everything was normal at the moment, if the emotion was the same, then that's right. Exactly.
Yep. Okay. Cool.
So once it starts, uranium's all publicised because of the high price and things. So emotion comes in. So LOT just jumps straight back up to there anyway. It starts from there. You see, they both did, but you get a better percentage here. That's like a, what is that? That's a 25. That's a 50, nearly a 50% gain. Whereas that's from 25 to 50 cents. Whereas BOE goes from $2 to $3, which is only a 30% gain. You see. Well, that's not even that, is it? Wait, no.
Well, $2 to $3 is 50%. The other one was what did you say it went from? 25 to 50, wasn't it? That's 100%. 100% is too. Yeah, that's right. Yeah. That'll do. Yeah, well, we'll take that. That's right. So we'll have a few of those. Thanks. Yeah, that's right. So all I'm saying is so we go, and I don't want to get too stressed about. I'm not trying to sell BOE or LOT. I'm just trying to illustrate how I operate with the. We've got to understand the cycles. You see. How you work it out? Yeah. Yeah. So the uranium cycle, yes, according to your calculations, is just about now. Yeah, no, it'll be roughly when. Well, that's interesting. It'll be roughly when uranium is at the incentive price, which means it makes it worth to start a new mine, and that's about $70 to $80. 70 to $80 at the moment. And of course, the thing with the uranium cycle normally, it's boom because it's so rare. It does boom and bust because that's what happens, and it's where was I going with this? So I slipped my mind now. We'll come back in a minute. Anyway, so
Yeah, but it's completely gone.
Don't you love it when that happens?
Yeah, it doesn't matter. It doesn't matter. But yeah, just it's all yeah, the uranium cycle. That's right. So $70. That's right. And when these because of the way it booms and busts so quickly, mines that will start making effort to mining and creating a plant, they won't get there before the end of the next cycle. And that's exactly what happened last time. It'll take them it takes 10 years to get your permits and get up and running and get producing. Well, by that time, the uranium cycle is over. So that's another reason why it's such a sure bet.
One more time. The uranium cycle starts and ends when?
When the price of uranium makes it viable to start a production plant to make 308.
So how do we know that?
You look up the uranium price, and at the moment it's $53. It needs to be 70. But what we do know, because
so $70 is what it costs to get out of the ground. Is that what we're saying?
To make it worthwhile getting it out of the ground and produce, and building a plant to process it in.
Right. So in other words,
so it's a multi. Obviously, it's I don't know how many. I can't remember the millions and millions of dollars it is, or billions to get a plant going. Yeah.
So in other words, similar to what happened with oil a couple of years ago, right? Went to zero.
Yes.
And we know it costs what, $40 a barrel to get out of the ground.
Exactly.
So it's got to go to $40, right? Otherwise, there's no oil.
There's no worth getting out of the ground. If there's not
and we're saying exactly the same thing with uranium, right?
Exactly. And Duncan, we know at the moment, because there's insiders, and the beauty of this stuff is, I said to you before, Jeff, I was worried about the nickel cycle, how they cancelled all the trades.
Yeah, they crashed it.
Because the shorters were going to go, the bankers were going to go broke, so they just cancelled everybody's trades. Is that a low life thing to do or what? Anyway, the point is, nobody like that controls uranium. It's all private. You can't just look up. You don't know what all the contracts are being set up for uranium. You've got to find somebody who's been doing it, and that talks to someone else. There's no big bankers shorting the price of it or controlling the price of it. There's no London Metals Exchange for it. There's nothing. So all this stuff's got to come from insiders to find out what it's been traded for, negotiated, the prices are negotiated for, and how much is available and how much is being processed. There's different processes. It's got to go through a couple of stages, and to do that takes time. You can't just turn it on and off overnight. If you've got a for want of a better term, they sort of, they're autoclaves, I think, or cyclones. If they're producing uranium flat out and they want to shut the place down, it takes 18 months to shut it down. And if you want to start it up, it's a similar thing. You can't just turn it on overnight. That's why all these cycles are perfect for trading.
Okay, that's really interesting.
So you've got to work out the cycles to be able to do it. So that's what I'm into, is what all this is about, is all these cycles of what I'm analysing and working out where they are. And obviously the pointy end's where I need to be at the moment. But there's things, I've just put that on there, which is 360 degrees from the first run up to there, you see. So that was a change of cycle for another part of the cycle. So I need to go and do a lot of homework on this now. But it's just something I've started. And interestingly, the next part of one's finish is about there. So, because these aren't sometimes on here, these are just, I'm just indicating the uranium prices with those.
Yeah,
that's 360 degrees and 270, all that sort of stuff. So there's a lot of homework to be done here. But that's the point. You trade this cycle because the company is more advanced. They've both got exactly the same type of company doing the same thing, but the timing's out by about 12 months, so you can extend the life of your productive cycle in the market by trading this the first 18 months, and this one will run on for the next 18 months or catch up. So you get that big whammy in the middle, so then you trade time for price, of course. So
that's the one we want, right?
And time and price have got to be square. Now that's something I haven't even got into yet. But you square that with the price at a certain time, and this will be behind at the moment. It'll catch up shortly. Yeah, so that's what it's all about. Exactly.
Brilliant.
So that's about that's probably the summary of what I've got for the I guess. Yeah, roughly.
Should we assume that if you've got some fundamental background knowledge as well, which you've done a lot of research on uranium, then it adds further power to the time by degrees. The time by degrees is when you want to look to be doing what you want to do, but looking into the actual product and understanding, what moves the price actually adds some extra power to what you're doing.
Well, it's all, to me, it's all one thing, Ash. I don't call myself I'm not really a fundamental trader as such, because I don't trust the people that publish the fundamentals. I mean,
Yeah.
but you wouldn't, I mean, like Jeff said, you wouldn't go selling ice creams in rings in the middle of summer. It's not a good idea. But when you're going to sell uranium and at the beginning of a uranium cycle, I think you're in on a winner. So, and that's where Duncan is at the moment with this company. And the word's out that he's doing contracts now for at least $70 a pound, and they've got no downside. Pretty much, they've got a downside for the company to some degree, which may or may not be the 70. It might be 65. I don't know. I'm not privy to that. But the point is, it's only subject to us upside as the cycle goes on. And at the moment, every time Japan starts one of the new reactors, their old reactors, which are all being started back up, then the uranium supply gets tighter and tighter and tighter. And at the moment, they're not buying it from Kazatomprom there in Russia, and people are voluntarily blacklisting anything coming from that area. Well, they make, I think, 15 or 20% of the world's supply as well. Well, you can't afford that because there's no spare. There's no surplus. So everything that's pressure at the moment means a rise at some stage. There's got to be a rise. Now they won't publish publicly where the prices are being negotiated at the moment, because that affects their negotiating ability. So they'll keep it secret for as long as they can. The first time, and interestingly, this is the first uranium BOE is the first uranium mine that will start up at the beginning of this cycle. He bought this company back here somewhere. Actually, that's what I missed off the chart. I was thinking of what I missed. I think it was 2015. Where are we? 18, 17, 16. Oh, here we go. Yeah, so he bought it here. That's what that's for. He bought that. Yeah. So Duncan bought it there, and he's timed this. You look at his chart. It's not very long from when he had it. He didn't have much. It bumped along the bottom, but you could see the progress being made as he was making announcements and things. And that is time to be ready to go right bang at the beginning of the market, and it's the first mine, a new mine that will start during this cycle. And LOT is the second one. So it's two things in your favour as well, you see. There's no other mines being started. There's one, I think another one I know of that's been got out of care and maintenance, will eventually. But there's none being, no one will start to build a mine till the price is at least $70 or $80, because that's what makes it worthwhile to actually start progressing with going through where you might have done a bit of, no, you wouldn't have done exploration, would you still need permits and because it's such a hot topic in the past, it takes 10 years to get a permit to mine anything and then produce it. So the cycle could be over by then. So this is critical. The timing of this is absolutely critical. This company, I can understand why they are a bit behind, because they're in Africa and the economics are slightly different and a few things a bit different. But the point is they're only 18 months, 12 months apart, I should say. So these two are absolutely perfect. There's plenty you can choose. There's about 6 others in Australia. But these two complement each other for all the reasons I've just explained perfectly for when the uranium cycle starts. And I'm suspecting, I don't know, I'm suspecting that when Duncan's going to have to admit what he paid for what he's getting for uranium, because he's got to go into business shortly. So he can't start operating the business without people knowing what they're getting for the uranium. Well, they're not going to buy the share, are they? If they know what it's worth. So he's got to publish that, and that'll be by Christmas time, I would imagine. We will know it'll be $60 or $70 or $80, and then all hell will break loose, as far as I'm concerned.
All hell sounds good.
Yeah.
Well, speaking of which, all hell will break loose if we don't get out of here.
Yeah. Yeah, brilliant stuff, Phil. As always, mate. Really good.
You're welcome.
Now we'll have a look at if anything's transpired next Thursday, right, on the uranium charts. That'd be good.
Yeah, and also the 22nd, we're got our eyes on for the FTSE, haven't we? So we will keep an eye on that too on Monday's show.
Okay.
We're back this Monday, aren't we? Yes.
Yes.
It's the 29th, right?
Yeah.
Okay. Then, folks, thank you for joining us once again. Thank you for being our trading buddies. And Ash and Phil, thank you for being my trading buddies. And we'll look forward to having a good weekend and coming back on Monday when we will do it all again. Hopefully we've got some cash in the tank at that point. We've got the Aussie going, it's going to test those lows again. We're in profit on that. If it doesn't get through those lows this time, I suppose I could share that with you very briefly. If you're in those trades, here's what I'm going to do. Why can't I do that? Now I can. Okay, we went short the Aussie here. If we can't get through this low this time, I will close the trade in profit because I don't want to go through this rigmarole of lower lows and highs and all that sort of crap. With Friday coming up, I'll reassess. Oil, we're free trading that, so it doesn't really concern me that much. If that doesn't go long, because it probably means that the Aussie will go short. This is a little bit, not direct hedge, but a little bit of a hedge. CAD Swiss, still refusing to do anything. It's bang on entry there. Look, as I said before, if we get a close, even on the 4-hour chart, below that level, I think we're probably wrong. So that one I'll be watching. That's a strong level where we are. And having broken it, I would like to see follow through. If we don't get the follow through today, then, as I said, I think we're wrong. They're the only three, I think, that we're in at the moment. So a little bit in the bank at the moment, not a lot, looking for some follow through. Have a great weekend, everyone. Bye-bye.
You too, mate.
For now. See ya.